Aloha and welcome to class time. Today we're going to be learning about the space economy. Now, with SpaceX IPO being the big news this week, of course you're going to need to cover other things. Now, SpaceX isn't the only play in this space game, right? So we're going to be watching the webinar from VanEck for their new ETF, Warp, your go-to ETF for your space economy. Let's get into it.
Hello, everyone. Just a few housekeeping items before we get started. I wanted to remind you all that at the very end, there will be a live Q&A. So we encourage you to put all your thoughtful questions in the Q&A box below, and we'll get to as many as we can. If not, we do apologize in advance, but please email info@VanEck to ensure your questions are properly forwarded. And just like that, Houston, we have liftoff. Good morning, everyone, and welcome. Thank you for joining us today. I'm Hugh Clark, Advisor Associate here at VanEck, and I'll be honest, I've been looking forward to this webinar for a while. In fact, I jumped at the opportunity when it came up. We're talking about space. Yes, the final frontier, and as someone who grew up watching every popular sci-fi film and show, this is one of those topics that still brings out that same excitement. Honestly, by now I thought we'd all have flying cars, probably celebrating holidays on Mars, and fighting galactic battles with lasers. But while the future may not look exactly like the movies have promised, space has moved from imagination into infrastructure. Think satellites, connectivity, data, defense applications, and commercial adoption are changing what this industry looks like. And what makes today's conversation so interesting? It's exciting, but it's also increasingly real. So with that, I am excited to introduce the great, the grand, the wonderful Nick Frassi, Product Manager for Thematics here at VanEck, who will help us unpack the opportunity and what investors should be watching as this theme continues to develop. Nick, welcome. Great to have you.
What a lead in. Thank you, Hugh. Yes, Nick Frassi, Product Manager, covering a myriad of our thematic ETFs. You might have seen me on some of the other webinars for semiconductors, digital assets, covering all of those different thematic investments. Today, obviously, we're talking about Warp, our newest launch for space.
Yeah, so thank you, Nick. Before we dive in, for any of you who are less familiar with us here at VanEck as a whole, we're a global asset manager with just under 200 billion in assets under management. We've been around for over 70 years, and the thorough line of our business has always been the same. Spot a structural trend early and build the cleanest, most thoughtful vehicle to give investors access to it. They've given investors access to post-World War II reconstruction through international equities in the 50s, anticipating inflation and hedging with gold in the late 60s, to embracing digital assets starting in 2017. Macro investing is genuinely in our DNA, and the VanEck Space ETF, ticker WARP, otherwise known as Warp, which is how Nick and I will be referring to it as, fits squarely into that tradition. So Nick, kick us off with why now, why Space ETF in 2026?
Yeah, I think essentially, I think our older clients will most likely remember growing up with the Apollo missions, right? Younger clients grew up with the shuttle missions. So I think the topic probably holds a special place in everyone's minds. There's definitely a nostalgia feel to it. But to your question, what's changed is essentially the economics, right? Reusable rockets have cut launch costs by over 95%. Not a marginal improvement, that's a category shift. So it's turned space from primarily government-funded program into what we believe is going to be a very commercially viable industry. Private capital, commercial revenues, recurring business models. You know, some might argue probably that the market is already real, and this is true. It's like over $600 billion in global revenue today from space companies. But industry estimates are pointing to 1, 2, maybe more $1 trillion plus in the next decade. But critically, the investable universe has matured, and that's important from an ETF construction perspective and why we think now, right? You've got to make sure that you have enough pure play names out there. So the set of liquid pure play public space companies is broader and deeper than it ever was, even a few years ago. So, maybe to take a quick step back and just very high level, and I know we'll talk about index construction and methodology later in the call, but when it comes to thematics and really all of our ETFs, we really try to be the pure play in the space, right? Companies driving 50% or more revenue from whatever specific theme it is that we're targeting. So you have to have that to really, what we believe give our clients the best ride and give that exposure, right? So focus core exposure to whatever theme it is what we're targeting. So, space has matured into that and created an environment where we can actually accomplish that and give that to our clients. And that's why we built Warp, right? So it gives investors access to an industry at an inflection point in that pure play way without the legacy aerospace defense dominant companies that you traditionally would see in the space ecosystem.
Yeah, so really great overview, Nick. Really appreciate it. So you already touched on a few points that we're going to get into more. But really what you kind of talked about, one, the word rocket, all of our minds kind of go to that when we think about the space economy. I can't be the only one here. So can you kind of take us through the space economy as a whole, more of the taxonomy and how you're viewing it and how VanEck is viewing it?
Yeah, for sure. Maybe quickly back to the construction methodology too, because I think it plays a part into this, right? So we try to be as forward-looking as possible when we're working with the indexing companies to build these underlying index, trying to look 10, 15 years out to make sure that we have long-term trends and we're not targeting fads. So when it comes to space, which is especially tough because the commercial aspect of it is relatively new. It's a very nascent industry in that regard. I think ultimately we have an idea of what types of companies might become space companies. So we try to be as focused, but then also allow for future opportunities when we're putting the methodology together and targeting specific industries. So the four main categories that the index is targeting are rockets and propulsion, right? So this is the access layer. Reusable rockets, turn a one-shot industry into a recurring mass-to-orbit business model, right? That's the ultimate inflection. And then satellite communications, which are obviously a big business already. This is probably the largest commercial opportunity. LEO or low Earth orbit broadband and direct-to-device is creating new addressable markets and unserved markets, which we'll get into. Earth observation and data, satellites as sensors, right? So essentially you're capturing a ton of data from these satellites. Agriculture, supply chains, defense, intel, operations, all of these different things, you're grabbing all of that. And then you have space exploration, right? Commercial cargo, space stations, if so, data centers in space, right? We've heard a lot about recently. We're in the very early innings of those things, as well as tourism and lunar operations. But when you're thinking about it over the next 10 to 15 years and trying to, I don't want to say be creative, but expand your horizons on what might be possible with bringing mass to orbit to such a economically viable cost, you have to kind of open options. And I know that that's been a topic of conversation. So those are the main categories that we're trying to look for within the indices.
So if I'm hearing you correctly, you use this word rockets and cheap, right?
Yes.
And launch and more frequency. So can you walk us through why, like how much cheaper it has become to send mass to orbit and why the cost curve is really just so much more send the space into orbit?
Yeah, for sure. So back in the shuttle missions, right, which was, really the first time you could really track, I guess, because the Apollo missions were much different, right? It's not the same target. For shuttle, we were getting up to space, we're going to the space station. You're actually taking things up there for low Earth orbit, or for orbit rather. So launches per year went from, under 100 a decade ago, actual launches into space, to 325 last year in 2025, right? So that's roughly a rocket every 27 hours. Cost per kilogram of mass to orbit, so every kilogram to get to orbit, fell roughly from 54,000, which would be back in the shuttle era, as you see in the graph there, to under 2,500 for the Falcon 9, which was in 2024 numbers. And then Starship is targeting under $200 a kilogram, right? So those are huge falling costs that are really, again, making it economically viable. And that's really the unlock, right? Because cheaper launch means more satellites, means more constellation, means more data, more applications. You're creating an entire economy in space. And every other segment will continue to scale because mass to orbit is making that economically viable. So reusability really has flipped the business model upside down and created true economies of scale. Marginal cost of an additional flight basically approaches zero.
Yeah. So cheap, frequent access to orbit, that's a supply side. Great.
Yep.
But access can only mean so much if nobody's buying into it. Can you talk to us about some of the demand drivers as well?
Yeah, pop to the next slide there. So we'll talk to the first one. So, we'll talk about this up front because I know that'll probably be a question that we get on this. But just because space becoming more commercially viable, that doesn't mean governments are stepping back, right? Because a lot of what was making space viable in the past was obviously government funding. That doesn't mean they're going away. This revenue base, keeps growing as space becomes more critical to security and economic growth. So the numbers tell the story. U.S. Space Force 2026 budget, roughly $40 billion, up 40%, driven by the Golden Dome defense spending. ESA, which is the European space, approved a record of $22 billion for 2026 through 2028, a 31% jump. Sovereign launch being the biggest line. NATO declared space operational domain back in 2019. So allies are continuing to build out their own capability, right? The bottom line is like geopolitical spending, not consumer spending. It doesn't flex with the cycle. It sits on top of the commercial growth. It's not replacing it, right? So just because this is becoming economically viable from a commercial standpoint doesn't mean that government spending is going to back out.
This is the Google AI Professional Certificate.
Start here to gain the skills for a new way of working.
Maybe you've asked AI to help write
I
an email or
will
to summarize a
not
long
pay
document.
for you
A nice
to-
time saver. But what
I
if that
have been
small
on it
win
way
was
too
just
long
the warm-up?
to ever
Discover
pay
what's
for this
possible
nonsense.
when it stops
But
just being
let's
the
continue.
tool you use.
So strategic defense spending, one
Yes, correct. So let's go to satellite. So that's kind of the second driver. Broadband, or it's one of the biggest commercial drivers. Starlink crossed 10 million active subscribers in February. That's doubling in about a year. It's targeting 25 million by year end. The next leg is direct to device, right? So actually getting satellite cell phone. Over 650 D2C, which is direct to cell satellites already in orbit, connecting standard smartphones, no special hardware needed, which is huge. And then competition is validating that model. Amazon, I think it's Kuiper. We're not going to mess that name up, but Amazon is deploying in 2026. Space Mobile partnered with Verizon, T-Mobile expanding to T-Satellite. A lot of the large players are moving to this space, and you're looking at a real viable market, not a niche, right? The TAM, or the total addressable market, is enormous. 2.26 billion still lack reliable internet, and 90% of Earth's surface has no mobile coverage, terrestrial mobile coverage. So on Earth mobile coverage for you Earthlings. At that scale, right? Satellites are really the only solution. And then the third driver we think long-term is AI in orbit. And, obviously you have the data center aspect we talk about, but that's not what we're talking about here. Most people aren't talking about this yet, but the shift is onboard processing, right? So you can actually take all of the data that's being downloaded every day, which is millions of images and different things that these satellites are collecting from a data perspective, and processing it in orbit. And latency goes from hours to minutes, right? So rather than collect that data, send it back to Earth, process it, and then we can do what we will depending on the situation. It's all processed in the satellite instantaneously and can be transmitted down, right? And this matters because Earth observation companies, like I mentioned, are now imaging the entire planet daily. AI turns like a fire hose of pixels into actionable items that people can act on, and that's really what unlocks the software like high margin revenue, we think. Data subscriptions to agriculture, energy, finance, government, you name it, right? So there's the amount of opportunity from just a data perspective on how much we're gathering and being able to get it and use it quickly is pivotal. And the market reflects it, right? Satellite data and analytics is projected to roughly double over the next decade. So we think those are ultimately the three main drivers of what it'll be.
AI is everywhere, isn't it? Even in space.
Can't get away from it.
Can't get away from it. So we kind of just zoom out for a second. Again, cheap, frequent launches on the supply side, sustained government spending, satellite broadband going mainstream, and AI turning satellites into what you call intelligent systems, right? Those are some pretty powerful forces, as you kind of mentioned there, all pulling in the same direction. So now the question becomes, how do we invest in it, right? Let's get into the index a little bit, some of the rules that we have. What are they actually getting? I also think this is a great opportunity to kind of talk about the elephant in the room being the impending possible SpaceX IPO, right? So if you just want to get into that, the methodology and possible rules there.
Yeah, for sure. We'll hit the high level. We don't want to get too into the weeds with it, but essentially it's a global holding.
Spoiler alert, SpaceX IPO today, and it was awesome.
Right? So it's not just US companies, these are global listed names. We're looking for 20 holdings inside of the portfolio, which is, I think, very differentiated between the peer group because we want to give that focused core exposure and not overly diversify. And then you're getting sector exposures roughly 50-50 between industrials and communication. Top holdings are Planet Labs, Viastat, Rocket Lab, EcoStar, companies that you guys have probably heard of. But I think from our perspective, again, into that forward looking for the index methodology, it could be that 10 or 15 years from now, the portfolio looks completely different because an entire economy has been built in space. And now, there are a myriad of different types of companies that are operating because it's more economically viable to do that in space or on the moon for that matter, right? So I think that's kind of our perspective on it when you're looking at the holdings and what we might capture. We do have the 50% revenue rule. That just goes to all of our thematics from a pure play perspective. We want to make sure that we have that. And then we have different liquidity screens that come into play just to make sure that, we're obviously operationally getting the best execution, making sure that spreads aren't blown out, that we're staying tight to the index itself and making sure we don't have, holdings inside of there that are very difficult to trade, et cetera, right? So $150 million market cap, $1 million average daily volume, all of these things that are pretty standard across our indices to make sure that we have good execution and good liquidity inside of the portfolios. So with all of that, for most of our ETFs, specifically too in the thematic space, we do have IPO rules. So there are a couple different IPO rules. So we have traditional IPO rules that would be like intra-quarter for smaller IPOs that we're constantly watching. But to your point, the big elephant in the room is like SpaceX, right? So what happens when SpaceX goes public? Are all these space ETFs going to capture it, et cetera, et cetera? I don't want to hypothesize. I don't want to we don't know when the actual IPO is going to be. Sometime this summer seems to be the kind of resounding idea. But the index is set up so that if there were to be a exponentially large IPO, we do have large IPO fast track rules, which capture companies that have over, I think it's $10 billion market cap, and some of the screens that are in place to make sure that we aren't grabbing small companies that IPO and having illiquidity in the portfolio. Because these names are so large, we do have parameters in place that help with free float, which is the amount of free shares that are traded on the markets, to reduce that, to make sure that these companies, we can access them. So there are rules in place for large IPOs. That doesn't mean that SpaceX will qualify for all those rules, obviously. It still needs to jump through those bars, be large enough, have at least a certain percent free float or free float of shares out there. But all things said, there are large IPOs or IPO rules in place inside of the methodology.
Yeah, so thank you for covering that because I knew we were probably going to get a question or two. A question
Sure.
or two on it. It's on everyone's mind. I can't go a day without it. But with that being kind of said, we're going to jump to Q&A here in just a second. Thank you to everybody who isn't able to stick around. Thanks again, Nick, to everyone else who's joined. At the start, I mentioned growing up thinking what the future might look like. I mentioned flying cars, space travel, the whole nine. And while the future has kind of taken a different path, today's discussion briefly is a reminder that some of that imagination is becoming, in real ways, more practical, investable, and connected to everyday life more than people realize. Space isn't just about rockets, even though they're probably the coolest piece. It's about infrastructure, it's about data, it's about connectivity, it's about national security. And increasingly, it's about the systems that support how people, businesses, and governments operate here on Earth. That's what makes this theme so compelling, not just the excitement of where it could go, as Nick put it, but the importance of what has already been built. So with that being said, let's get into some of these questions we have here. Nick, I have
Okay, I'm not going to play it through the Q&A because that makes no sense at all. But I'm going to give you a couple of takeaways. Now, that was the first time I saw that info webinar, just like you. And what I took away from it, from the 25 minutes or so, is that really this ETF is designed to profit and grow off of the inevitable space economy, right? We got infrastructure, the fun parts like rockets, defense, and communication, right? Those are four different things that can grow and grow income for tens, 12, 20 generations. Who knows? Space is kind of the not kind of. It is the next frontier, and that is going to be the next big economy. So VanEck being on the cutting edge as always. Warp is no, well, slow man to the game, right? It's right there in the name. Warp speed. They're going to be getting all of the great space economy that you want right there in that ETF, and they're going to manage it professionally. As you've seen in this webinar, they know what the heck they're doing. They have clear-cut rules, and I trust them. I'm glad I picked up a starter pack of Warp. I encourage anyone who's looking for a economic space play rather than just a direct SpaceX buy to why not consider this as an option to your space portfolio. But with that being said, not financial advice, not a financial advisor. I love you. Be safe. Ahui ho. Have a wonderful night.